Hello and welcome to another one of my investor videos. For those of you who don't know me, I'm the Money Sponge on Twitter and I'm a junior resources investor predominantly in the oil and gas and mining sectors. Many of the stocks I talk about would be deemed high risk due to low liquidity, low market capitalisation and generally being early stage companies. The videos that I produce are intended to assist others with their research. They're not investment advice, so please always do your own research. So today I'm going to be talking about Emmerson PLC, a junior mining company that I've recently invested in. Emerson is a potash development company developing its Khemisset potash project in North Morocco, which it purchased via an RTO in earlier 2018 from Moroccan Salts Limited. The market cap is 18 million. And they raised 6 million on the relisting, and the rest of the money is attributed to the purchase of the Moroccan Salts Limited Khemisset project. Board of directors, the CEO is Hayden Locke and he has 15 years mining experience, specifically in the potash space, and previously worked at Highfield Resources. The executive director, Rob Rickson, who was previously from Moroccan Salts Limited, which is good news that he's come onto the board. Obviously, there's the connection then to the project, and he's holding actually 7% of the Emmerson shares. So that's another positive for me. And then there's Mark Connolly, who is the chairman, and he's got a lot of experience in the sort of the financing space, financing large-scale mining projects. So across that core team there is a wealth of experience in the different areas that you'd hope for in a management team running a junior company with a project of this scope. And there's other people obviously on the team, and if you go to the company website and look at the management team and the extended team, you'll see that there are other people with good experience as well in this sector. They've all got skin in the game, which is good as well, and it's also worth noting that in the IPO, the Scottish billionaire and Glowag took a stake in the company as well, which made it into the press, and I think she's quite widely followed and respected. She's obviously had a lot of success, so it's good news that she's come in as a strategic shareholder. So in terms of the actual macro backdrop then behind potash, before we talk about the project, the outlook is good. I've done a fair bit of research on this. I mean, it's a fairly balanced market, but demand is increasing. Now, Emmerson are going to be producing the MOP K60 product, which is the cheapest and most affordable for farmers to use, and hence why it's the most popular and accounts for 95% of the market. In fact, in 2017, there was a record 64 million tonne consumption, and this is expected to grow in 2018. So I like the macro backdrop in terms of a growth commodity. The prices are rising, and I've spotted a few recent off-take contracts. One done this week with China with a potash company for $290 a tonne, which is an improvement on recent contract prices that I've seen. And in fact, in the northwest of Europe, where Emmerson are going to be located and the project's located, you can get premium prices paid up to around about $310 a tonne. So the prices are improving. There's a growth market there. Potash is a requirement going forwards, given the increase in the world population and the resultant increase in food demand. So the project itself then, so the Khemisset project, it's in North Morocco. It's got a large 311 million tonne JORC compliant resource, and they're targeting around 800,000 tonnes per annum, and this got a 25-year mine life. Interestingly though, there's also significant exploration upside across the acreage and the tenements they own, and a recent RNS was published that said that they potentially have a JORC compliant estimate of potentially up to 600 million tonnes, which is double the size of the original project. So potentially big exploration upside on offer here for investors, and I like that. You know, it doesn't have to be just one contained project. If you've got more scope and more growth, that's good news, and it's also good news for anyone that be looking at the project externally, perhaps a competitor or a suitor. So what are they doing at the moment with this project? Well, they're progressing the scoping study, and this is the main focus, and what they're shooting for is a high margin, low capex project. We've heard a little bit about this from the company, and indications so far as they've started doing the work on the scoping study are pretty good. They had a recent seismic survey completed, and what that was focusing was on looking at the geology, and they found that there's no significant faulting around the project, which helps de-risk the projects itself, and these things all feed into the planning and the costs for the mine. The mine access component, which is one of the larger capex components, which is getting into the mine and how you get into the mine, is down to $35 million, which is significant, as it puts this project in the lowest capex for that component globally, in fact in the lowest 10%. To put that into perspective, peer costs, typically for mines in Canada, can come in around about $1 billion capex just for this component of the capex. So this is significant, and this is why the company has sort of, I think, been shouting about this from the off. Their experience has led them to believe this, and it's coming to fruition. The project itself is close to a local port and established infrastructure. This all is going to impact positively on the economics. The project itself and the asset is de-risked by historical drilling that they've done, and they estimate that the project itself had a previous $20 million spend on it. So, you know, shareholders are essentially getting that money baked into the share price now if they were to buy. I said the location, in terms of infrastructure and what have you, that's great, but also it's important to note that the location of the project in terms of a market perspective, and Morocco is one of the fastest growing consumers of potash globally, and we're also on the doorstep of Africa, and they will have high demand going forward for potash as well. So it's very well placed from both perspectives. As I said before, it's got a large JORC compliant resource, so this has been done, the drilling's been done, 136 drill holes, and it's got big exploration upside. So this is now a development project, not an exploration project, and you could argue the market cap might reflect, when you take off cash, that it's actually an exploration project. It is not, it's a development project. It's shallow, around 450 metres, which on a benchmarking basis is actually relatively shallow, which is good again for capex and opex. It's the K60 MOT product, as I said before, which is the mainstream product, and therefore more liquid, if you like. They're likely to, as I said before, have an extremely low capex here, and as the scoping study progresses, we'll find out more about that, but it's looking good from the initial mine access component, the RNS that was released. There's no unconstrained aquifers. This is to do with water around the mine, and this is a good thing for the project, and reduces the overall costs. And as I said before, they're close to premium markets. So if we move on to the investment case then, so why would you be interested in investing in this company, and why do I think it's a good investment, more to the point? Well, it's got a highly experienced board, and they've got a good investor comms today. You know, I've been very impressed with what they've been doing on social media, and they're very accessible board. I've managed to speak to them a couple of times. They're going to get out there in front of investors. This activity is starting to build up now from today, 21st September, when I'm talking. They're going to get more in front of investors, and I think that the whole visibility of the company is going to start increasing as we move towards this all-important scoping study. There's a strong macro backdrop. This is another point. You know, there's demand growth there, and prices are increasing, Despite it being a fairly balanced market, the demand growth is there from what I've seen, and that's something I like to see in an investment as well. It's a potentially low capex, high margin project. I think this is going to be evident from future news flow and from the scoping study. And we see this already from the mine access component coming in around about 95% cheaper to global peers, which is phenomenal. And I've just been sort of playing around with some of the numbers, and I've touched base with a few other investors that I know are in this stock and have looked at it, and I've also had a brief chat with the board to try and get some, I'll call them fag packet numbers at this stage, but numbers that I think are realistic. And I think we're looking at potentially a cost of around $80 to $130 a tonne. Now that's a fairly wide range, but it has to be at this stage because we don't have the scoping study yet. And of course, if we knew all the answers, I don't think this would be trading at 18 million market cap. But this is my view: 80 to 130 cost. And I think that if you look at contract prices that we've seen, if we assume something like 250 to 300, so therefore, if you were baking in something like $150 margin over a 25-year mine life and producing potentially 800,000 tonnes of product per annum, you'd be looking at something like 120 million EBITDA. This is a fantastic figure for an early stage investment, and something that if you think is possible and you're prepared to ride it through the investment timeline, you should be rewarded. Obviously there are, and we must say, there are risks in any early stage mining companies, and this is why we buy into companies earlier, and we have to be risk aware. But if you do the research and you think everything stacks up, then this is where opportunities exist. Again, there's another reason why I'm interested is the big exploration upside. The figures are fantastic on the project we have at the moment alone, but what if we were to have 2 times that, and the expansion capability there, and also be aware of the fact that bigger players like someone like OCP or BHP, who are also potash miners, could have eyes on projects in this location, and so that's an interesting perspective as well. As we said, it's an excellent location. I like the jurisdiction. I like the fact it's close to local markets, which is good, and premium markets at that. And if you look at the economics, I've looked at a recent broker note on the company, and the project NPV is around 400 million, which is an unrisked NPV at this stage, but that would be something like about 60 pence per share. The risked NPV, or the risked, if you like, share price that they've got at the moment is around 11p a share. So this factors in the early stage risk. And this broker note was actually done in April 2018, and we're now in September here, and they've actually delivered already a few de-risking steps on the capex side. So you could argue that this 11 pence per share risk valuation could actually increase. And in fact, when we get to the scoping study and when they produce that, where could this risk valuation lie then? That's an interesting thing. And September today, and I think the scoping study is supposed to be coming early in front end of Q1 2019. We're not far away off, and so there's potential for significant uplift in the share price. They're fully funded. I like that. They're fully funded right the way through 2019 for work commitments. There's lots of near-term catalysts, which we'll talk about in a minute in terms of what's coming next. And yeah, I mean, to me, it ticks all the boxes from the investment case side of things. So what is coming next then? So this is how I'll close out the video, really. I like to just sort of like sum up at the end why I think, I mean, I've discussed why I invested in the company. Now I want to know how quickly, or what am I going to see in terms of share price appreciation. So plenty of near-term news flow, all centered around the scoping study. There are a lot of remaining steps to feed into that scoping study over the next couple of months in terms of things like infrastructure, logistics, so things like that will feed into things like the capex figures and OPEX planning. The scoping study itself, well, this is latest guidance is going to be coming by front end of Q1 2019. So really only sort of 10 could come from 10 weeks time from this video today. So it's not a long time. So often before things like scoping studies, you'll see a share price build up, and I'm expecting this to happen with Emmerson, given the ramp up in PR that I should imagine will come as well. And then once they've done the scoping study, early Q1, they'll be on to metallurgical testing and moving into the pre-feasibility study. Now, I've spoken to the board and they think there's a fair chance, and they're hoping that they can move straight towards a bankable feasibility study. And the bankable feasibility study is the bigger piece of work that essentially goes into detail and analyses all of the inputs to the financial model, the economics, and gives you solid numbers that you can put in front of financiers or potential JV partners, and gives solid numbers around this and de-risks the project to the point of where it's saying this is what the project is going to make. So that would be a following on. But as I just touched on in terms of JV potential, it's worth noting that there's a company, OCP, and they're one of the world's largest producers of fertilizer, and they have tenements around where the Emmerson Khemisset project is, and I believe have been buying tenements recently as well in that area. And so I should imagine their eyes would also be on this project and seeing how it's progressing, and they would be a perfect partner, in my opinion, to come in and get involved with the project at project level, even to the point where they could actually get involved in offtake and what have you. So Emmerson are perfectly placed here with this project. So I think that's an interesting angle, and other big boys like BHP, lots of mining companies now are. I think the mergers and acquisitions space is going to start heating up across many commodities, and potash shouldn't be any different. As long as the money's there, the economics are there. And what's extremely attractive about Emmerson's project is its low capex. So there is plenty there in the pipeline. And don't forget also that they'll be in parallel running the the environmental and permitting side of it. So these are all the things that the company does in the development curve to get to the construction ready decision. And I'm very excited about this company. I've been invested in a lot of previous companies early stage. I like getting into companies early stage. There are plenty of catalysts here short term for me. I like the fact the company are fully funded, and I think the scoping study could be fantastic, and dare I say a dream come true for investors if someone was to come in early and take the company out. So there you have it. That's my reasoning. I hope I covered everything in terms of my sort of tick box exercises, which is, does the project stack up? Do the management team running it stack up? Is there an investment case there? And are there catalysts coming forward? I think it ticks all of those boxes. And I hope you enjoyed the video, and by all means go and do your own research on the company. It's, I think, a compelling entry level now at 3PO around the IPO price. So yes, do indeed have a look.